Yes, thank you so much. So this is a topic that has various facets to it, but we're gonna keep this quick and dirty tonight. I know you guys are probably going to get dinner. Thank you for your time and attention. And let's go to the first slide. Let's see what we got. And thank you, Bipla. It was great to have you. Thank you, Stacy. You guys really add a different dimension to the credit memo. So I love hearing from you both. Okay, so you saw this in the slide, but what is a business line of credit, or an LOC is what I'm going to refer to this as. So it's a flexible amount of money for businesses that can work like a credit card, but also can work like a traditional loan. So a business can withdraw funds whenever the need arises, as long as the credit limit isn't exceeded. So that's what we had in the credit memo, and that's really what we want you to know. Let's go to the next slide. So there are different types. We use this in the credit memo as well. A line of credit can be revolving or fixed. And for this particular investment, it's a fixed line of credit. So a line of credit is often considered to be a revolving account, also known as an open-end credit account. This arrangement allows borrowers to spend the money, repay it, and spend it again in sometimes never ending, but for your particular bank, they see an end. But revolving cycle. So non-revolving or fixed locks have the same features as revolving credit, but the credit limit is established. Funds can be used for a variety of purposes, and the pool of credit does not replenish even after payments are remade. So this is what Comfort Kitchen is going to have. They will have $100,000 to draw down in different increments. It can be 25,000. It can be 50,000. It's not going to be 500. Okay, so there are levels to this, but there will be established chunks that will work out with Comfort Kitchen should this investment go through, where they can draw down in increments and receive that money when they need it. So that's a little different from when your business gets a line of credit, say from Chase, for $10,000. You can take down $800 here or there, or $1,000 here or there, or 10,000 or 20,000, no problem, as long as you have that amount of cash on your line of credit. You will pay it back and it will replenish, and you can come back to the trough over and over again. That is not the same as a fixed line of credit. Let's go on to the next slide. So business line of credit versus personal line of credit. So I really wanted to add this in because there are some questions, and I think that as you build your repertoire of financial information, you need to know how it can apply to you in your everyday life, even if you're not a small business owner. But knowledge is power. So a business line of credit provides small businesses, business owners, with access to short-term funding. Okay, you can use a line of credit to cover business expenses, which is what Comfort Kitchen will be doing, like paying your employees or purchasing inventory. So what's a personal line of credit? So a personal line of credit is usually revolving and is a set amount of funds that you can withdraw as needed. If you need ongoing access to the funds, or if you don't know the full cost of the project, a personal line of credit may be better than a loan. Okay, with a personal line, you can use the credit as needed and only pay interest on the funds you borrow. This is one of the key differences between a loan and a line of credit. In a loan, when you draw it down, you're immediately paying interest on that whole amount. For a line of credit, if you have $100,000 line of credit and say BIPLA wants to withdraw $50,000, you're paying interest on that $50,000 and not that full $100,000. So there's a key difference in your loan and line of credit. Let's focus on the next slide. So there are many types of personal lines of credit. Someone brought this up earlier, a HELOC. She knew the interest rate was like 7% or so for a HELOC, and that's a home equity line of credit. So that is a personal line of credit, and that is different. So a HELOC is a line of credit secured by your home that gives you secured by your home or property. It can be income property, it could be rental property, things of that nature, but secured by a home that you own a vested interest in, that gives you a revolving line of credit to use for large expenses or to consolidate higher risk debt, higher rate debt on other loans. So HELOC or home equity loans are similar methods of borrowing money via the equity in your home. So a HELOC usually has a variable interest rate, while a home equity loan is a lump sum paid back in fixed installments, like your traditional loan. So both typically allow you to borrow up to 85% of the value of your home minus your outstanding mortgage balance. So keep that in mind when you're looking at a HELOC, and those rates can be a little bit higher. Just want you to know that for all the homeowners out there. Next slide. And then there's also, this is lesser known, but very helpful in your everyday life. So a banking reserve line of credit. So this is offered by many banks, and sometimes you have to ask for it to protect your checking account from overdrafts. We all have those moments, but this is sort of a reserve line of credit. So it generally automatic advances to your checking account if your balance ever falls below zero, to stop you from going in the negative, to stop you from accruing fees and transaction costs with your bank. Those are the most typical personal lines of credit. You can also have a banking reserve line of credit for your business. That is not uncommon. Let's go to the next slide. So are these locks or lines of credit interchangeable? No. I'm a small business owner. I have my own consulting that I do. So it's tempting to use every source of income that you can get your hands on. But it is not good to mingle business and personal funds. So, I know sometimes as budding entrepreneurs, we want to pull out our personal credit cards when purchasing items or equipment for your business, not realizing that you are really missing out on potential benefits and possible write-offs. So using a personal line of credit for business purchases will also lead to problems when reporting your income when tax time arrives. So it's important to remember, not just for lines of credit, but for business in general, mixing business and personal expenses is a no-go. You should try to separate wherever possible. And I want you all to remember that a business line of credit provides small business owners with access, and large businesses as well, with access to short-term funding. So you can use this line of credit to cover business expenses like paying your employees and purchasing inventory, which is something that Comfort Kitchen will be doing with their line of credit. So that's all I have for you. Are there any questions? Anything that you would like to know or that we didn't cover?
Juliet, can you just talk a little more? So you talked about this piece about increments. Can you just talk a little more about how Ujima is thinking about that with regards to Comfort Kitchen, if there should be an investment?
Yes. So what we're doing is looking at possible increments of 25 to 50,000. So either 4 drawdowns or 2 drawdowns. But I think that needs to be based on a conversation with Comfort Kitchen. Is that what you're thinking about, or are you thinking of something else?
Yep, the drawdowns, yep.
Okay, yes. So again, with a fixed line of credit, it's not going to be that $1,000 drawdown. That's not going to work for that business line of credit. It's going to be much larger chunks of that broader investment of $100,000. I see we got a question.
Yeah, thanks for the presentation. You said that you've done business consulting in Boston. Are there like banks that you typically recommend to pursue line of credits?
For personal or business? I won't give you advice on either. I'm going to be careful about what I say.
Yeah. If you're comfortable endorsing, I don't know, business, like a small
For a
business.
business, I would say I am proud to have worked at Dorchester Bay Economic Development Corporation, and they offer a tremendous loan program that I think is worthy of investigating for a small business loan. I would always say there's Leaf. There are a few other community-based lenders that I think are all in the family, so to speak, in Boston. So I would recommend definitely a community-based lender before anything else.
Cool, thanks. Also, hi everyone. I haven't seen some of you in a while.
Hey, Alex, nice to see you. Maybe Julia, what do you think about credit unions?
I
Or-
love credit unions.
Yeah.
I think minority depository institutions are even better. But you know, I love credit unions, and I think that those are also non-traditional ways to have an impact on your community. Most of those are member owned. And so becoming a member of your local credit union, I think, is a step in putting your money to work for you. So I appreciate credit unions as well. And they are good for business and personal. A lot of people think that your local credit union is only for those personal expenses, but some of them do also cater to businesses.
Thanks.
Any other questions?
Maybe how long was the Comfort Kitchen memo term for?
4 years.
4 years. Okay, sorry, I missed that.
No, yeah, that's all right. 4 years.
Cool. Notepad go.
Okay, you guys are gonna, I don't have any jokes tonight, so I can't say anything entertaining beyond lines of credit, and make sure you vote.
Julia,
Yes.
so what are some good questions to ask if I'm trying to choose between product types or institutions? Like, is there a website I can go to get like a checklist of stuff? Or
You know, for personal lines of credit, you can, I always like NerdWallet. They happen to do an article on me, so I like them. But they give you a good list based on your factors that you put in, you know, your credit score, the amount of money you want, what institutions you're looking at, and they really sort of give you a breakdown of those things that matter most. Rate, interest rate, and duration or length of investment. Those are the two, most important things when you're looking for a personal line of credit, because you want it to work for you. And also, I think one thing that I always say on HELOCs, people say you consolidate debt. Visa and MasterCard are not going to take your house, right? So do not take out a HELOC in order to settle high interest rate credit cards. It's just not good. Don't do that, people. Because then you can lose your house if you default on a HELOC.
Yeah.
So those are things to think about.
And is real estate considered like personal or like business?
It can be personal or business. Your company can absolutely own real estate and then take out and borrow against that real estate, borrow against the equity in that building. And of course, you can do so with your home, rental property, investment, things of that nature.
Cool.
What interest rates are you seeing right now for lines of credit? I think Comfort Kitchen requested 5%.
We set that at 5%. I think that is well below the national average. I have seen a lot of lines of credit now with darn near credit card rates. I have seen like 12 to 15%, on up to, I think, what can almost be predatory levels of like 35, things like that, which you should avoid at all costs. But I have seen those double-digit numbers, which makes it very difficult for the average consumer, one, to wade through and know if that is an accurate assessment of the market, or two, to be able to understand the long-term implications of taking out a line of credit at that interest rate and using that capital on things that may have a lower cost of capital, maybe can be done or achieved at a lower interest rate. I'll say that.
Thank you, everyone. I hope you had a great night. Definitely want to thank you again, Julia, with all your on both
Thank you.
presentations. So thank you again. But everyone enjoy their night.